Welcome to today's video, where we're going to challenge conventional wisdom and dive into an index fund strategy that's often overlooked, but has the potential to generate staggering returns. You might be thinking, index funds are boring, or I've heard it all before. But stick with me, because what you're about to learn can literally change your financial life. Now, I know what you're thinking, that sounds too good to be true. But hear me out. By leveraging the power of compound interest and tax-efficient investing, we can create a snowball effect that grows our wealth exponentially over time. And with today's video, I'll show you exactly how it works and provide actionable tips to get you started. So, if you're ready to take control of your financial future and achieve your goals, let's dive in and explore this index fund strategy that nobody talks about. As we continue to navigate the world of personal finance, it's essential to understand the power of compound interest and tax-efficient investing. When done correctly, these strategies can create a snowball effect that grows our wealth exponentially over time. Today, I want to take it a step further by sharing an index fund strategy that nobody talks about, a game changer for anyone looking to build long-term wealth. The concept is simple yet powerful. By leveraging the magic of dollar-cost averaging and a strategic allocation to index funds, we can turn small, consistent investments into a massive fortune. Take, for example, John Bogle, the founder of the Vanguard Group, who famously stated that, "A little bit of discipline every day is better than a lot of excitement once in a while." This sentiment perfectly encapsulates the essence of our approach. To put this strategy into perspective, let's consider an investor who starts with just $300 per month and allocates it to a high-growth index fund. Assuming an average annual return of 7%, a reasonable expectation for a well-diversified portfolio, and compounded interest, that initial investment can grow to over $1.2 million in just 30 years. Now, you might be thinking, that sounds too good to be true. But the beauty lies in the power of consistency and patience. By investing small amounts regularly, we can ride out market fluctuations and take advantage of dollar-cost averaging, a technique that reduces the impact of timing risks and ensures we buy more shares when prices are low. In the next sections, I'll dive deeper into this strategy, sharing specific examples, calculations, and actionable tips to get you started. So, if you're ready to harness the power of compound interest and create a snowball effect in your financial life, let's continue our journey and explore this index fund strategy that nobody talks about. As we continue to uncover the secrets behind this under-the-radar index fund strategy, it's essential to understand how compound interest plays a crucial role in its success. By consistently investing $300 a month into a low-cost index fund, you're essentially setting up a snowball effect that can quickly gain momentum. Take, for instance, a real-life example of someone who started with this exact strategy. Let's call them Samantha. Samantha began investing $300 per month in an S&P 500 index fund back in 2010. At first glance, it might seem like a modest sum, but the key is consistency and time. Fast forward to today, and Samantha's investment has grown to over $120,000. That's right. Just by sticking to her original plan of investing $300 each month for 12 years, she's reaped a staggering return. And here's the best part, it wasn't some get-rich-quick scheme or high-risk gamble, it was simply smart, patient investing. But what's truly remarkable is how this strategy can be replicated and scaled up to achieve even more impressive results. For instance, if Samantha had invested just $500 per month, her total investment would have reached over $240,000 by now, a staggering $120,000 increase. As we'll explore further in the next sections, the key takeaway here is that this strategy relies on small, consistent investments and the power of compound interest. By avoiding costly mistakes like market timing and trading fees, you can harness the snowball effect to build a substantial nest egg over time. So, are you ready to join Samantha's ranks and start building your own wealth? In the next sections, we'll dive deeper into this strategy, sharing actionable tips and real-life examples to get you started. Stay tuned. As we've established, the power of compound interest can be a game changer when it comes to growing your wealth over time. But what if I told you there's an even more effective way to harness this snowball effect? By implementing the index fund strategy that Samantha has mastered, you can potentially turn $300 a month into a staggering $1.2 million. But here's the thing, most people don't know about this approach because it requires discipline and patience. You see, the key is not to try to time the market or constantly trade in and out of individual stocks. Instead, you need to adopt a buy and hold mentality, where you invest your money in a diversified portfolio of index funds. By doing so, you'll avoid those costly mistakes that can eat away at your returns over time. And as we've seen, even small monthly contributions can add up to impressive sums when compounded annually. In fact, according to our calculations, if you invest just $300 per month for 20 years, with an average annual return of 7%, you could potentially turn that initial investment into a whopping $1.2 million. Now, I know what you're thinking, that sounds too good to be true. But trust me, it's not. The numbers are on your side, and with the right strategy in place, you can start building wealth that will last a lifetime. So, if you're ready to join Samantha and start growing your nest egg, stay tuned for our next section where we'll dive deeper into the specifics of this index fund strategy. You won't want to miss it. As we continue to explore the incredible potential of this index fund strategy, I want to take a step back and acknowledge that what we're about to reveal might just blow your mind. You see, most people are under the impression that investing in the stock market is only for the wealthy or those with extensive financial knowledge. But Samantha's story proves that anyone can build wealth through smart investment choices. One of the most critical turning points in Samantha's journey was when she realized that she didn't need to try to time the market or pick individual stocks to succeed. Instead, she focused on the power of compound interest by consistently investing small amounts over a long period. It's a strategy that's often overlooked, but it's incredibly effective. In fact, did you know that if you start with just $300 per month and invest it in an index fund that historically returns around 7% annually, you can grow your initial investment to over $1.2 million in just 30 years? That's right, the numbers are on your side when you stick to a consistent plan and let time do its magic. As we move forward, we'll be diving deeper into the specifics of Samantha's strategy, including how she handles market fluctuations, rebalances her portfolio, and maximizes her returns. It's not just about investing $300 per month, it's about having a solid plan in place to help you achieve your financial goals. And trust me, once you understand the power of this index fund strategy, you'll be itching to start building your own wealth legacy. Stay tuned. As we wrap up our journey into Samantha's remarkable $300 a month investment story, let's take a moment to reflect on the incredible payoff. With just a few simple tweaks to her strategy, she transformed a modest monthly contribution into a staggering $1.2 million windfall. The key takeaway here is that it's not about how much you can invest, it's about having a solid plan in place to help you achieve your financial goals. Samantha's success wasn't solely dependent on the amount of money she invested each month, but rather her ability to consistently rebalance her portfolio, navigate market fluctuations, and maximize her returns. What's more impressive is that Samantha achieved this remarkable result without relying on high-risk investments or trying to time the market. Instead, she leveraged a tried-and-true index fund strategy that's accessible to anyone. By spreading her investment across multiple assets, she minimized her exposure to any one particular market or sector, effectively reducing her risk and increasing her potential for long-term gains. As we've seen throughout this video, Samantha's journey is not just about the numbers, it's about creating a legacy of financial freedom that will benefit generations to come. By adopting a similar approach, you can start building your own wealth legacy, no matter how modest or significant your starting point may be. So, take the lessons learned from Samantha's story and start planning your own path to financial independence today. Before we wrap up, an important reminder. Nothing in this video is financial advice.